the SOC gen rating from Moody's is still higher than that of Fitch and S&P. So theoretically, actually, it doesn't actually have any material impact, really, on their funding.
Yeah, I mean, arguably to some extent it is bearish, but I think a lot of people were anticipating this. For example, I think it was flagged on the newswires at the weekend. So I think a lot of people would just see this as, kind of catching up with expectations. Also, I think, there are a couple of key events this week. One being, I think Merkel and Sarkozy are allegedly going to be talking with Papandreou later today. And also, I think European finance ministers are going to be talking with Geithner on Friday. So I think from a risk-reward point of view, you could see some short covering today. That doesn't mean we're out of the woods by any means.
No, and of course we gave these stocks a bit of a shellacking on Monday anyway. So that was maybe our time when the trade came in. It was interesting. We heard earlier from Bank of America Merrill Lynch, their fund manager survey out yesterday, and they said they've never seen a lower amongst their survey a lower weighting in banks and financials. I mean, the suggestion being actually that there's very few fund managers that own this stuff anyway at the moment.
Yeah, I mean, I think deep value investors will almost certainly be bottom fishing now. I think from a fundamental basis, if you do have the capital to participate in any hypothetical rights issues, there's clear value here on a long-term, let's say 3 to 5 to 10-year time horizon. I think for more nimble short-term investors, from a tactical point of view, you may want to try and time your entry into the banks better. Effectively, if rights issues are announced, then you could, for example, see 20-30% sell-off, and that might be the optimum point of entry.
Yeah, I mean, are we going to see, is it inevitable we're going to see more capital raisings or not?
It really feels like that. And I think, was it the former head of the FSA, Howard Davies, who I think yesterday said that he thinks rights issues for the French banks are required and essentially expects the French authorities to do such. The valuations for the UK banks certainly are consistent with rights issues in the near future. For example, Barclays, RBS, Lloyds all trading around 0.4 to 0.6 times tangible book. That tells you investors are effectively expecting rights issues in the next 3 to 6 months.
Cormac, hi, it's John here. I think your call on a possible correction of 20 to 30% is bang on. I wonder if you think that the Moody's actions, for example, are the end of it? Are they the start of it? Are we going to see these downgrades spreading across to other banks in Germany, possibly in the UK, elsewhere? What's your view on the credit quality, near-term credit quality of these institutions?
Yeah, I think funding is the key issue right now. So I think the key question is what will the authorities actually do? If the authorities could step up to the plate, start to move towards more fiscal integration across Europe, if you start to see the ECB talking more about quantitative easing, or shifting to quantitative easing rather, from their reasonably hawkish stance up until now, if you start to see those kind of actions from the authorities, I think you could start to see a very strong recovery in the sector. However, failing that, I think it's a deja vu of the 08-09 experience where funding starts to dry up, and it is a race against time. These banks are in relatively good shape versus how they were in 08-09 in terms of term funding and so forth, but it is a race against time. They do have quite a lot of short-term wholesale funding, less than 12 months. So as that starts to roll closer and closer to maturity, you need the wholesale market to be open, and effectively there's incrementally more pressure every day on the authorities to take an aggressive policy response.
We just had this announcement that Spanish banks borrowed 81 billion from ECB for August, which shows you they need to keep providing the liquidity. We're going to talk about banks a little bit more, Cormac, so you stick around with us. And John, been good to have you on the programme today in Hong Kong, but we're going to let you go. Thanks so much for joining us. John Woods, Chief Investment Officer at Citi Private Bank. Still to come as well, the results of a long-awaited US probe into the BP Gulf of Mexico oil spill might be released as early as today. So what might that mean for the future of offshore drilling? Plus, the US Treasury reportedly standing ready to back the Fed's potential new stimulus measures. But will Operation Twist actually get the job done? We'll talk about that. And Courtney is going to join us as well to go through it all.